Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
The euro didn't wait for the European Central Bank meeting in the narrow range we anticipated, 1.0796 and 1.0905. Immediately headed towards its lower boundary at the level of 1.0796. We can assume that the lower boundary is slightly below, along the MACD line, the blue line on the graphic, and the embedded price channel line around the mark of 1.0784. Here the main struggle for breaking this support awaits, which will mark the start of a new medium-term trend. The euro was at the level we're considering, 0796, during the first half of December 2023, in the first half of February, and in the first half of April. Also, and in early May. Thus, during all this time, the ECB rate cut, which will happen next week, was not factored in the current prices at all. We believe that this is the real reason why the price will drop from the local high. Of course, the stock market played a significant role here. The S&P 500 plummeted by 0.64% on Wednesday. Neil Kashkari's statements about the possibility of the Federal Reserve rate hike added to the excitement. On the 4-hour chart, the price is ready to contend with the strong support levels. But beforehand, it would be better for it to become stronger. The euro could make such a breakthrough as early as today, provided that the Eurozone employment data, unemployment rises, and the US GDP numbers for Q1, GDP turns out to be higher than the forecasted 1.6%, do not disappoint it, causing media discussions to intensify about an overheating US economy.
There are pivot points as a lifestyle. Evangelos Poulakis explains how to trade GBPUSD currency pair.
The pound sterling demonstrates a bearish bias on Wednesday, like the euro, and consolidated below the intraday short-term trend, 1.2738, which currently acts as resistance and will be the first mark that the market encounters in case of a potential retest. The bears have a walk-in on the downward movement will interact with nearby support levels. Today, the first support levels are located at 1.2665. Daily plus weekly Fibonacci key-zones, and 1.2622. Daily medium-term trend. The bears currently have the advantage on the lower timeframes. In order to continue the decline, the bears will need to test and overcome the supports of the classic pivot levels during the day. 1.2671, 1.2645, and 1.2596. The key levels are now forming resistances, and in the event of a corrective rise, traders will encounter them at 1.2720, central pivot level of the day, and 1.2737, weekly long-term trend. After a breakout and trend reversal, the current balance of forces may change.
What about Nasdaq 100 index? Arif Makmur explains.
On the 4-hour chart of Nasdaq 100 index, it is detected there is a hidden deviation between its price movements with stochastic oscillator indicator. where this things gives the clue that in the near future ANDX has the potential to correct it downward. From its bullish bias, which is currently taking place, and in the next hours, ANDX is trying to break down below the level of 18,701, where, if this level is successfully penetrated below, then the level of 18,457 will be the next target to be aimed at. And also, the third aim would be 18,457.4. But all of these weakening correction scenarios will automatically cancel if on the way ANDX suddenly turns back to initial bias, especially if it succeeds in breaking above the level of 18,853.
That's all for today. See you online soon.